What's up everybody? It's Kevin here from Stock Hours. Today I'm going to be bringing you guys a video showing you how to treat your day trading like a business. Many of you guys know that many newcomers into the day trading space, they come in here, they click two buttons, buy and sell, and they expect to make money. A lot of you know that's not the case, so without further ado, let's get right into the video so that we can show you how to treat your day trading like a realistic business. Step number 1 of treating trading like a business plan. A business without a plan or any rules is simply a failed business. The same thing applies to trading. When it comes to day trading, we're going to need a plan and rules set in place that we can follow. If you can't follow your own plans and your own rules, then you're never going to make it. As harsh as it sounds, that's the reality of it. When it comes to making a day trading plan, you guys are going to need a couple things. I'm going to tell you these things right now. You're going to need levels to look at so that you know what level you're going to play. Then you need an entry price. You need a take profit. You also need a stop loss. There are also some other things that you need to take into account, like green flags. Green flags being like, oh, maybe my stock is stronger than the market and it's ahead, showing that strength. Or the stock is showing extreme weakness and the market is staying flat. That's another green flag for me. There are also red flags. Red flags being like maybe there's high volume pullbacks or the stock started to move like the market, and those are just red flags to you that would make you want to get out of a trade. The second step to trading like a business would be to have a legitimate and trustworthy platform. Some examples of these platforms that we use here at Stock Hours, I can give you a couple examples, would be Moomoo, Thinkorswim from Charles Schwab, Interactive Brokers, and there's so much more that go down the list. But the main point here is that you guys are going to need to find a broker that you guys can trust, because ultimately you're going to be putting your money in there so that you can place trades on the platform. You need a good charting service that you need to trust while you're placing trades, because that's kind of what you're going to be making your decisions off of visually, right? You also need to take into account that there's going to be commissions. Moomoo, for example, has free commissions. Interactive Brokers has expensive commissions, but they have an amazing service for level 2 and market data. So you're just going to have to outweigh the pros and cons when it comes to picking a trading platform / brokerage for you to be placing your own trades on. The third step here would be execution. This kind of ties into step 1 of having a trading plan, but when it comes to execution, you're going to want to know what you want to see, why you want to see it, and when you want to see it. I'm going to give you guys a quick example here. For example, I'm going to play 500 puts on Meta. That's part of my game plan from step 1, having a trading plan, right? What I would want to see is Meta being weaker than the market coming into that 500 level. Why would I want to see that? I would want to see Meta be weaker than the overall market, because that's going to confirm to me that whenever the market drops, Meta is going to drop even faster along with the market, which is going to be even better for the trade. Now, when it comes to when I want to see this happening, I want to see this happening right around my 500 level. I want to see weakness picking up towards 500 so that it can confirm my idea of taking this trade. Otherwise, if none of these things match with my trading plan, then I'm not going to take this trade. So always keep in mind, you want to know what the perfect execution scenario looks like in your head at all times. The next step to treating your day trading like a business would be risk management. Every other business out there has some sort of risk management system. Day trading is no different. You guys need to do the same thing. For example, you guys need to know how much you're going to risk per trade. For example, if I'm starting out on a $3,000 account and I'm risking 30% of that portfolio, that means I'm going to be taking roughly $1,000 per trade. And let's just say I want to have a 10% stop loss per trade. That means I'm going to be losing $100 per trade, which means hypothetically, if I take 3 trades every single day, I can only lose a maximum amount of $300. Here's an example for you guys. If I take $1,000 per trade with a 10% stop loss, which equates to a $100 loss, I'm going to be aiming to make 20% on that trade with that $1,000 position size. This way, I have a 2 risk to reward system for my risk management, right? And me risking $100 to make $200, this is a solid business plan to me. As I know over time, if I keep doing this consistently, my business will eventually grow. The last step in order for you guys to treat day trading like a business is for you guys to keep a journal. Now I know it sounds funny, Kevin, journal? What journal for what? In order to run a successful business, you guys are gonna need to account for your company's statistics, how well you guys perform during summer, fall, winter, just like trading, right? You guys are gonna have to know what months you do best, what days you do best, what stocks you perform the best on, what's the best type of risk management for your stop loss and your take profit, what setups do you perform the best on, what type of market conditions do you perform best on. These are all things every single trader needs to account for, because these are times when you know when to take advantage in trading. If you don't do so well in December, for example, in trading, but you do really well in the month of June when it comes to trading, size down on December. Size down on the month of December. And when June comes around, you can size up on the month of June, because you've already proven to yourself already that you do the best when June comes around. So take advantage. Learn to play offensive and defensive when it comes to trading. Just like in the example I gave you, we're going to be playing the defensive side when it comes to December and we're trading. But when it comes to June, we're going to be offensive. A lot of newer traders out there, all they want to do is offensive, but they never protect the backside. And those are the things that I have for you guys in order to treat day trading like a proper business. Thank you guys for watching. I hope you guys enjoyed. Make sure to like, comment, subscribe to the Stock Hours YouTube channel. I'll see you guys in the next video. Peace.